Residential Sales Comparison and Income Approach, Preface, Part 2. Chapter 5 introduces fundamental principles of the income approach. This chapter explores and illustrates terms, concepts, and components analyzed and/or developed by the appraiser when the income approach is applicable in an assignment. Chapter 6 examines and demonstrates the analysis performed by the appraiser for developing an opinion of value by the income approach. This chapter illustrates the development of a value opinion using multipliers and the direct capitalization method using an overall capitalization rate. A detailed presentation of determining market rents as well as the techniques for deriving multipliers and rates of capitalization is also provided. Chapter 7 discusses the appraisal of partial interests and special ownership situations. Also covered is the use of combined approaches and special requirements for appraisals for use in residential lending transactions, Fannie Mae guidelines and requirements that the appraiser agrees to observe in developing the sales comparison and income approaches in residential assignments are emphasized. USPAP references within the text. USPAP references are based on the 2008-2009 version of USPAP, the Appraisal Foundation. Exam prep. Additional appraisal products available from Hondros Learning to help students prepare for the licensing exam include the Appraisal Review Crammer, a valuable self-study or classroom exam preparation guide, Appraisal CompuCram exam prep software, Appraisal Vocab Crammer audio CD, and Appraisal Vocab Crammer flashcards. About the author. I don't know if I'm going to read all that shit. Chapter 1. Introduction to Sales Comparison and Income Methodologies. Valuation methods for real property can be thought of as avenues of analysis by which the need, desire, and expectation for a particular property is measured in numbers based on how well the need, desire, and benefit is satisfied by the property being analyzed. Real property appraisers have three valuation methods known as the approaches to value: the sales comparison approach, the income approach, and the cost approach. In this text, we will focus on the sales and income approaches. Several accepted techniques for developing value opinions are available to the appraiser in each approach, which will be explored as we progress through this course. Focusing on residential applications of the sales comparison and income approaches, we will discuss in this chapter what prompts the appraiser to employ a certain methodology and technique. Highest and best use class is supposed to be the hardest. I actually read this before, but I didn't record it, I don't think. Page 2. Relevant valuation fundamentals. Fundamental principles and theories of value must always be included in the appraiser's thought process when developing value opinions. Let's begin by reviewing those cornerstones in the context of how they apply specifically to the sales comparison and income approaches. Substitution. Probably first and foremost in the appraiser's mind when developing an opinion of value is the principle of substitution. In the sales comparison approach, substitution is rooted in the premise that an informed buyer will not pay more for a property than they would be required to pay for a comparable substitute. The principle of substitution can also be applied to features of a property. A comparable substitute is one of equal utility. For example, if an appraiser is determining the value of a property feature, the appraiser must be conscious that a knowledgeable buyer is not usually willing to pay more for the existing feature than the cost of adding the feature to a house that does not have it. Extra note: there is a limit to something max property values, and substitution principle argues this fact. It relates to substitution. We use substitution in everything we do. Add the Appraisal Institute's website to your hot list for current data. Definition: anticipation. An economic theory that says value is created by the expectation of future benefits, such as profit, pleasure, tax, shelter, production, income, etc. Anticipation is the foundation for the income approach. Appraisers' peers. Other appraisers with expertise and competency in a similar type of assignment. Assumptions. That which is taken to be true. Balance. A condition that exists in the real estate market when there are slightly more homes available than buyers. Buyer's market. A situation in the real estate market in which buyers have a large selection of properties from which to choose. Change. A principle affecting value in real estate that says all factors that influence real estate, physical, economic, governmental, and social, are constantly changing, and thus property value itself is subject to constant change. Characteristics of value, also known as DUST. The characteristics of value are demand, utility, scarcity, and transferability. Client, the party or parties who engage an appraiser by employment or contract in a specific assignment. Competition, two or more parties, properties, etc., trying to obtain the same thing. Conformity, the theory that says a particular property achieves its maximum value when it's surrounded by properties that are similar in style, function, and utility, also called homogeneity. Contributory value, the theory that a particular item or feature of a property is worth only what it actually contributes in value to that parcel or of real estate. Credible, worthy of belief. Date of report, an indication of the perspective from which the appraiser is examining the market. Effective date establishes the context of the value opinion. Extraordinary assumption, an assumption directly related to a specific assignment, which, if found to be false, could alter the appraiser's opinions or conclusions. General data, information that covers the forces that affect property values, but are not directly related to a particular piece of property. General data covers physical, economic, governmental, and social factors, PEGs, and can be local or national.